data, corporate earnings, and China's economic policy announcements, geopolitical developments, particularly in Asia, and Fed commentary on interest rates will also influence market sentiment. Now, to discuss more on the story, we are being joined by Jayant Krishna, Senior Fellow at the Center for Strategic and International Studies. He's joining us from New Delhi. Thank you so much for joining us.
A pleasure.
Now, you have also led key initiatives of the Indian Prime Minister's Skill India Mission as CEO and Executive Director of the National Skill Development Corporation. Questions. Of course, this is something which I had to mention. Now, let me begin by asking you, will U.S. stocks continue their outperformance in 2025?
Yeah, so if we talk about 2025, I think before that, if you look at 2024 itself, it was a banner year for U.S. Stocks. If you look at S&P 500, last year it grew by 23%, and a year before, in 2023, it grew by 24%. So if you look at this 20% plus kind of increase, to my memory, it's the first time from 90s, when this kind of a jump has been seen. And also Nasdaq and Dow Jones both have done well. My feeling is this bullish trend would continue, as the overall US, economic outlook for 2025 with the Trump, taking oath in a few days from now remains positive. There are some uncertainties, of course, about the trade policy and so on and so forth. But by and large, I think, few of the announcements he has made, like, the cutting corporate tax, easing the regulation, higher import tariff, declining interest rates, these are all likely to, constitute, and contribute towards a better economic outlook. So I think it should translate to the stocks doing well. And I'm pretty hopeful of, the market remaining bullish this in the current year itself. The only issue could be that, some uncertainty about the immigration rules, reduction in government spending and inflation control not being as good as it has been in the recent past. I think these are areas of concern. Otherwise, I feel, the going is going to be quite good for US stocks in 2025.
All right. Now, that was US. Let's come to India as well. When do you think emerging markets like India could rebound after the recent corrections?
So I think, if you look at both Sensex and Nifty, they had a peak around September 2024. And since then, there's been around a 10% correction from the recent high that the market saw, So I think among emerging markets, India holds a lot of promise for a variety of reasons. A lot of people, a lot of economists say that India is the poster child of economic stability in this world today. IMF, the growth rate of the GDP, they have not really changed their forecast. 2024 was 8.2%. 25 is 7%, and only in 26 they're talking about 6.5%. But tell me that no major economy is growing even at that higher growth rate at all. And above all, I think very strong domestic appetite demand continues. The retail demand continues, which is very good. So I think it's going to be good in general in emerging market, and I'm more bullish about India. My only concern could be on a couple of areas, that the new IPOs which get introduced, the newer issues. So they generally they swamp the secondary market with supply. And that becomes an issue. So if IPO as a percentage of the overall market size is huge, it goes up substantially, then there could be a matter of concern for the secondary market. And of course, the FIIs should not be selling, their selling should not go up substantially. That's also remains a concern. So I think if you disregard these, by and large, I thought, I think going to be very, very good for Indian stock market. And even for other emerging Asian economies,
Right. Before I let you go, Mr. Krishna, my last question would be, what is your target for Nifty 2025?
I think I would not speculate that at all. At what level it remains. I generally refrain from this kind of a guidance, but in general, both Nifty and Sensex would do well, as I said earlier. And the recent the Fed rate reduction by 25 basis point. I think that is also, if you look at the U.S. economy, it's actually. Any changes in the Fed rate, primarily it's twofold. If the going is good in the economy, it prevents overheating. And if the going is not good, then it prevents a recession. I think so. Third year, in a row in last year, they had announced the cut, and that's also good. But overall, I think any forecast about at what level Nifty or Sensex would settle, I generally refrain from such guidance. Such a guidance.
All right. That was Mr. Jayant Krishna joining us. Thank you so much for joining us and giving your perspective.
Pleasure.